I ever feel like investing is a game for the super rich that you need a huge pile of cash just to get started. Well, I'm here to tell you that's a myth. Today, we're going to explore how tiny, almost unnoticeable investments can quietly grow into a real source of income. We'll uncover 10 smart methods that can turn your pocket change into a powerful wealth-building machine. So grab a notebook, because you're about to learn how to make your money work for you no matter how small you start. First up, let's talk about the magic of dividend investing. Think of it like this. You buy a small piece of a big, stable company, and as a thank you they share a portion of their profits with you. These payments are called dividends. You can start with just enough money to buy a single share. The key is to choose companies with a long history of paying and increasing their dividends. Then, you reinvest those dividends to buy more shares. This creates a snowball effect. Your initial small investment starts generating income, which then buys more income-generating assets. Before you know it, you have a steady stream of cash flow, all from that one small start. Method number 2 is a personal favorite. Micro-investing apps. Platforms like Acorns or Stash have revolutionized the game for beginners. They let you invest your spare change automatically. You link your bank card, and every time you make a purchase, the app rounds it up to the nearest dollar and invests the difference. That 50 cents from your morning coffee, invested that 25 cents from your lunch. Invested, it feels like nothing, but over a year, these tiny amounts add up to hundreds, even thousands of dollars, all working for you in a diversified portfolio. It's the definition of investing without even thinking about it, slowly building your wealth in the background of your life. Next, let's dive into real estate investment trusts, or REITs. Love the idea of earning rental income but can't afford a whole property? REITs are your answer. These are companies that own and operate income-producing real estate like apartment buildings, shopping centers, or office towers. By buying a share in a REIT, you're essentially becoming a landlord to thousands of properties, and you get a cut of the rental income, usually through high dividend payouts. You can get started with a very small amount of money, giving you a taste of the real estate market without the headaches of property management. It's a brilliant way to diversify your portfolio and tap into a historically stable asset class. Method 4 is all about a classic, steady performer: high-yield savings accounts and certificates of deposit, or CDs. Now, I know what you're thinking. Aren't the returns really low? While they might not offer the explosive growth of stocks, they offer something incredibly valuable: security and predictability. A high-yield savings account gives you a much better interest rate than a traditional one, letting your cash grow safely. CDs lock in your money for a set period for an even higher, guaranteed return. This is the perfect place to park your emergency fund or short-term savings, letting it earn you a little extra income with virtually zero risk. It's the slow and steady tortoise that quietly wins the race. Number 5 on our list is peer-to-peer lending, also known as P2P lending. This is where you become the bank. Platforms like Prosper and Lending Club connect you with individuals who need a loan. You can invest a small amount, say $25 or $50, into a fraction of a loan. As the borrower pays it back with interest, you get your share of the profits. Of course, there's a risk of default, but by spreading your small investments across dozens or even hundreds of different loans, you significantly reduce that risk. It's a fantastic way to generate a relatively high rate of return and passive income, all while helping someone else achieve their financial goals. This might be the most powerful investment you ever make. Spending a small amount on an online course, a certification, or a book can give you a skill that dramatically increases your earning potential. Learn coding, digital marketing, graphic design, or a new language. These skills can lead to a side hustle, a promotion, or a completely new, higher-paying career. The return on investment here isn't measured in dividends. It's measured in a fatter paycheck for the rest of your working life. Don't underestimate the power of investing in your own human capital. Method 7 is a fun one: fractional shares of fine art and collectibles. In the past, owning a masterpiece by a famous artist or a rare collectible was reserved for the ultra-wealthy, but now, platforms like Masterworks allow you to buy a tiny fraction of a multi-million-dollar painting. As the value of the artwork appreciates, so does the value of your share. It's an exciting way to diversify your portfolio into alternative assets that are tied to the stock market's ups and downs, while it carries its own set of risks. It's a fascinating way to turn a small investment into a piece of cultural history that could potentially yield a beautiful return. Coming in at number 8, starting a microbusiness or a side hustle with low startup costs. Think about what you're good at. Can you walk dogs in your neighborhood? Can you offer freelance writing or editing services online? Maybe you can create and sell digital products like templates or ebooks on a platform like Etsy. Many of these ventures require little to no upfront investment, just your time and your skills. What starts as a way to make an extra $100 a month can be scaled up, slowly and surely, into a significant income stream that gives you more financial freedom and security. Every big business started small. Our 9th method is to systematically invest in low-cost index funds or ETFs. This is the foundation of smart, long-term investing for many people. An index fund or ETF holds all the stocks in a particular index, like the S&P 500. So instead of picking individual stocks, you're buying a small piece of the entire market. The strategy is simple. Invest a fixed amount of money every single month, no matter what the market is doing. This is called dollar cost averaging. When it's up, it buys fewer. Over time, this smooths out volatility and builds your wealth steadily and reliably. It's the ultimate set it and forget it strategy for growing your money. Finally, method number 10 is about leveraging rewards and cashback programs. This isn't a direct investment, but it's a way of creating found money that you can then invest. Use a cashback credit card for your everyday expenses, but always pay it off in full each month. Use loyalty programs at stores you frequent. Use browser extensions that find coupons and give you cashback on online purchases. At the end of the month, you might have an extra $20, $50, or even $100 that you didn't have before. It's a simple hack to supercharge your investment contributions without changing your budget one bit. So there you have it, 10 practical, intelligent ways to turn small, consistent efforts into meaningful income. From the power of dividends and micro-investing apps to the long-term growth of index funds and investing in yourself, the path to building wealth is open to everyone. The most important step is the first one. Start small, stay consistent, and be patient. Thanks for watching. See you in the next one.